Hi everyone, and welcome back to a brand new episode. My name is Marcus and I'll be your host. In today's episode, we're going to take a look at IBM. If you're new to this channel, welcome. What we do here is that we study and analyze stocks. We go through the fundamental and the technical analysis of the stock, but we also talk about finance and investing. And if you've been here before, thank you so much for coming back. Guys, I truly hope you guys will enjoy this episode, and please give me a thumbs up, comment, subscribe, and let me know what you think and also what stocks you want me to take a look at. Thank you so much once again. Now, let's get started. As I mentioned, we're going to take a look at IBM. And if we go down to the screen, we can tell that they are traded on the New York Stock Exchange and are in the technology sector. Their market capitalization is $121 billion and their revenues are $74 billion. And their PE ratio is at 22.8. Guys, I like to take a look at companies with a price to earnings at 20 or below. So having a 22.8 is not far from the threshold, but it's still above what I'm looking for. So this is a no. And the PE ratio also tells you about the market expectation of the stock. So having a 22.8, it says that the market doesn't have a high expectation of the company. Now the profit margin is at 7%. I like to take a look at companies with a profit margin of 15% or higher. So having a 7% profit margin, that is just way too low. So that is a no for me. Now the price to sales ratio is at 1.6. Normally, I like to take a look at companies with a price to sales ratio of maximum 2. So having 1.6, I like it. So that is a go for me. Now, the price to book value is at 5.5. Normally, I like to take a look at companies with a price to book value of maximum 3. So having a 5.5, I understand it's not far from the threshold, but that's still a no for me. So they pay out a dividend of $6.5 per share. I like it because I like that dividend income. And the effective return is at 4.7%. I like it. So that is a good to go. Now, return on equity is at 24%. I like it. Basically, return on equity tells you as an investor about the company's ability to create a return on the invested capital. And it's very critical for you as an investor to take a look at these numbers and understand, is the company able to create a return on the capital that I invest in them? So having 24.5%, I like that. So that is a major goal. Return on assets at 3.8%, a bit low, but still acceptable number. I would like to see that a bit higher number, about 3.8. I like it, so that is a go. Now they are currently traded at $134 per share. If we take a look at the 50-day moving average, we can tell that we are trading below and also below the 200-day moving average. This is a clear signal that we might see the stock price go even lower. If we take a quick glance on the chart, we can see here that we used to move higher levels. We traded higher, we're in a positive trend channel, but then we changed direction and now we're trading lower and lower. But we'll take a closer look at the technical analysis as we move on. So let's go over to the income statement. And what we can see here from the income statement is that the total revenue went from $79.9 billion in 2016 up to $73.6 billion, no, down to 73.6, sorry about that, in 2020. And if we take a look at the progress, we fell off 1 year and got back up and it fell off once again. So they are trading around $79 billion per share. That is a minus. I would like to see a clear positive development, but it's still a great number, $73 billion in revenue. That is great. Gross profit went from $38.5 billion down to $35.6 billion. And also we can see here that we fell off and the numbers are getting lower and lower. A bit of fluctuation, but overall trend is negative. That is a minus. The net income went from $11.9 billion down to $5.6 billion. and we can see here that we're having a bit of fluctuation. So this is a minus. I want to see a positive continuation. I want to see them grow every year and have a positive number every year. So a bit of fluctuation. It's hard to determine the future of the company, but overall trend tells me I'm not liking it. So this is minus. Now let's go over to the balance sheet. And what we are interested here is that the current assets versus the current liabilities. And we can tell that the current assets is less than the current liabilities. Not by much, but it's still a minus, because if the company were to convert the current assets to cash in order to pay off the current liabilities, they will be still in debt with a couple of million. So that is a minus. And looking at the total liabilities, we are far from being able to pay off the total liabilities. And we can see that the total liabilities have been growing every year. We reduced it 1 year, but every year it has been growing. So that is a minus. I want to see the company reduce their total liabilities. And if we go over to the outstanding shares, and we can tell we went from 945.9 million outstanding shares down to 892 million shares, and we have been falling every year. I like it. So that is a plus. This is a great thing. When you see a company reduce the outstanding shares, that means the company is buying back shares. And as for an investor, that means that your share of the company is growing. And a lot of investors miss this one or skip, because, for example, they take a look at companies' balance sheet and they see that the total liabilities is not growing that much, and they'll be like, oh, well, this looks great. But on the other side, we see that the company is increasing their outstanding shares rapidly, because that's a way for a company to bring in more capital. So instead of taking on new debt or new loans, they increase the number of outstanding shares in order to bring in more capital. So be very cautious, be alert on this. So seeing that they are reducing their number of outstanding shares, that is positive. I like it. Now, over to the cash flow. And what we are interested here is that the operating cash flow minus the capital expenditure. And we have operating cash flow, and we can see it went from $17.1 billion up to $18.2 billion. We fell off a couple of years and then got back up and doing better than we started off with. I would like to see a positive development every year, so this is a minus, even though 2020 did better than we started. But if we look at the difference between the operating cash flow and the capital expenditure, there is a huge difference. So I like this, and we can tell that the numbers have been improving over the years. I like it, so that is a plus. Now over to the key figures. And what we are interested here and looking at, the earnings per share went from $12.5 per share down to $6.2 per share. And we have been doing lower and lower number every year. So that is a minus. Revenue per share went from $84.4 per share down to $82.4 per share. And it's a bit of fluctuation here, not by much, but still a fluctuation. That is a minus. Equity per share went from $19.2 per share down to up to $23 per share. And we fell off 1 year, 2 years, and then on the fourth year we got back up and doing better, but still a lot of fluctuation. But here I gotta give it to them. The dividend per share went from $5.5 per share up to $6.4 per share, and has been growing steadily every year. I like it because I like that dividend income, and it's positive to see that the dividend is growing every year. So that is a plus. I like it. Dividend share went from 44% up to 103%. And we have grown 95% here, 64, 60, 103. This is a minus. I want to see a company that pays out less than 60%. And the reason is that I want some of the capital to remain in the business for them to improve, become more efficient, reinvest, or make some acquisitions. So when I see a company pay out more than 60%, that is a minus. So I'm not liking this at all. Now, gross profit went from 48.1% up to 48.3%, and we fell off a couple of years. and now got back up. A lot of fluctuation, so this is a minus. As I mentioned before, I want to see a positive continuation every year. Fluctuation makes it harder for you as an investor to determine or forecast the future. So that this is a minus. If we go down to 2020, we can see that they had 48.3% gross margin. So that means that more than 50% goes to the cost of goods sold. Imagine selling a product or service for $1, you get to keep 48% before your operating costs. But we shouldn't just be looking at this number. We need to compare them with other companies in the same industry to see, is this a normal level? But still, I would like to see a positive development. So this is a minus. The operating margin went from 15.4% down to 6.4%, and we have been doing lower and lower number every year. That is a minus. They need to become more efficient and reduce their operating cost. Profit margin went from 14.8% down to 7.5%, and we have been doing lower and lower numbers every year, so this is a minus. Return on equity went from 65% down to 27%. Have been doing lower numbers every year. We got back up 1 year, but the trend is negative. Return on equity is critical. It tells us about the company's ability to create return on the invested capital. So be very cautious, study the numbers, but right here I'm not liking this number, so that is a minus. Return on assets went from 10% down to 3.5%, and we're doing lower numbers. We got back up 1 year, but overall trend is negative, so that is a minus. Solidity went from 15.5% down to 13%. We have been doing lower number, so the trend is like we have seen before, so this is a minus. Solidity tells you about how much of the total assets is financed by the equity, and it also gives us an indication about the company's financial strength for the short term. And seeing these numbers, so this is a minus. Balance sheet liquidity went from 0.6 down to 0.3, and we fell off. We've been doing lower numbers, so this is a minus. Balance sheet liquidity, same thing as solidity, but here it takes a look at the company's financial strength for the long term, and seeing these numbers, I'm not liking it at all, so that is a minus. Debt ratio went from 5.4 down to up to 6.5, and has been growing steadily every year, so this is a minus. Debt ratio basically tells us, if we take a look at 2020, we have 6.5. That means we have 6.5 times more debt than equity in the company. The numbers is growing. I'm not liking it, so this is a minus. Guys, we have gone through the income statement, the balance sheet, the cash flow, the key figures. Now over to our key feature of our software, which is the pillars. And basically what the pillar does is that it gives you an easy summarize over everything we've gone through, so you don't have to dig through the numbers. It saves you a lot of time, a lot of headaches, and it does the heavy lifting for you. So if we summarize, for instance, we can tell that, okay, the PE ratio is above 20, which is negative. The payout dividends, which is positive. The dividend payout is greater than 60%, that is negative. Dividend increased over the past 5 years, that is positive. Numbers of outstanding shares have decreased over the past 5 years, which is positive. Revenue decreased over the past 5 years, that is negative. Profit margin less than 15%, that is negative. And profit decreased over the past 5 years, that is negative. Current assets is less than current liabilities, negative. Solidity decreased over the past 5 years, negative. Balance sheet liquidity decreased over the past 5 years, negative. And debt equity ratio increased over the past 5 years, negative. And the total liabilities increased over the past 5 years, negative. Guys, as you can tell, an easy summary that you can digest and understand, and you don't have to dig through the numbers. If you want to dig through the numbers, you can go ahead and dig through the numbers, but this tool gives you everything you need. And for only $25 per month, it's yours to have, along with everything we've gone through. Plus, you get access to our analysis page where we publish more articles and videos for you to enjoy. And you get also access to the chat where you be able to chat with me along with other members. So join today for only $25 per month. It's yours to have. Now let's jump over to the technical analysis. So here we have the technical analysis. Let me just lay down the lines here and something like that. Let me see, something like that. And let me do a resistance, something like, let me see here, something like that. Let me change the color to red. And we can also tell that we are, let me set support line, something like this. And let me change the color to green. Okay, so here we have the stock. Let me see, let me lay down a resistance level, something like that. We have some resistance over here, support line over there. Okay, so what we can tell is that we are in the negative channel, the trend channel. I believe the stock price will continue in its trajectory, moving lower number, and eventually for a breakout. So that is what I believe the future holds. It will break out, and if it does, we need to be very cautious that when we see a breakout in the channel, I would not jump right away. I would wait for the stock price to move higher, and then fall back, and for the buyers to come back and push the price even higher. And when the price breaks previous high, that's a buying signal for me. But by looking at this chart, how to trade normal, I don't like to trade a negative channel. What I would do in this case, in order to trade it, I would wait for the price to move even higher. We might see some resistance here. A lot of buyers may come back. But if we break this line, this support line, and hit the support line down here, that's where I would buy the stock for a potential price move of 20%. Not a huge jump, not a huge trade, but that's okay. But that's how I would trade the stock. But otherwise, I would wait for the price to move even lower and lower as it goes closer and closer to this support line. That's where all the buyers are and waiting to push the price even higher. But for the short term, how to trade the stock is to wait for the price to fall down below this support line, and when it hit the support line right down here, that's where I would buy the stock. We won't see a huge price move, but that's for the short term. But for the long term, I would stand by and wait and let the price continue down in its trajectory, in the negative trend channel. And when we come closer and closer to the support line down here, that's where I would buy the stock and hold it for quite some time, a couple of years perhaps, and just earn that dividend. And that's how I would trade the stock. How would you trade the stock? Please let me know in the comment box below, and please give me a thumbs up, comment, subscribe, and let me know what you think, but also what stocks you want me to take a look at. Thank you so much for watching. Until next time, take care. Bye bye.